Welcome. I'm thrilled to be joined today by Roei Levav, co-founder and CEO of quant trading firm eFrontier. Welcome, Roei.
Thank you very much, Paul. Great to be here. Thank you for the invitation.
Absolutely. Can you just tell us a little bit about eFrontier before we dive in?
Yeah, so we go by Efficient Frontier. eFrontier is the domain name. And Efficient Frontier is basically an algo trading company. We started developing strategies and HFT infrastructure since 2006 in traditional markets. In 2017, we kind of felt the crypto ecosystem is mature enough for us to jump in. The idea was taking our technology and infrastructure and knowledge and practices and apply it to this nascent market. That's proven to be very successful. We were involved in the industry since 2013 individually, but kind of felt that this is the right time. That's been, it's been pretty successful. We since broadened our suite of solutions and services to other verticals, and now working with some of the largest companies in the space. We see ourselves as part of this group of companies that bear the responsibility to improve the market, to advance the industry and the ecosystem, and we are happy to be part of that movement. We are seeing ourselves as crypto first and trading shop.
So look, this week, big week, Bitcoin made its all-time high again, just by a smidge. Just scraped it. It's kind of toying with it, keeps coming back. We'll see what happens there. There was a lot of attention on Ethereum with the triggering of the ETH2 beacon chain. So starting that process of upgrading Ethereum to migrate from proof of work to proof of stake. And compared to earlier in the summer, I guess some of the attention around DeFi has kind of has drifted off a little bit. But as we know, it's crypto. There's always things going on beneath the surface. What are you seeing? From a trading perspective, I assume you cover kind of the market quite broadly. In terms of new assets and new products coming to the market, what are you seeing right now?
Yeah, so it's interesting to view. I mean, we are connected to the backbone of the infrastructure of the trading part of the industry, and it's been pretty nice to see the progress, exchanges, infrastructures, products made specifically last 6 months, but I would say it's the whole year. So from a latency perspective, robustness of the infrastructures, APIs, products, all of this kind of stuff were very made a pretty, I'd say, an aggressive progress over the last 6 months, and we've been obviously part of that. So I think exchanges, while they are facing a very significant challenge, not being just the matching engine, by being the broker itself, the bank, holding them funds, giving the leverage, taking the risk, all of that, and having millions of people are connecting to the website at the same time. This is actually a larger challenge than traditional exchanges facing in that sense. So it's good to see, and we coming from traditional markets, so we know to appreciate that progress. We are seeing that approaching traditional market level, I'd say, in some cases. We are still seeing things that you won't probably see in traditional markets. What happens with some large exchanges, halting withdrawals and stuff like that. So that's kind of still alarming, but that's fine. It's a new market. It's growing. It's in infancy, I would say. But at the same time, we are seeing round trips makes being much better, security wise, being much better. We see companies like Copper or Fireblocks connecting to more and more exchanges and more parties. We are using some of these solutions as well. So we feel comfortable about that, even if things happening, and from a tech perspective, from a regulatory perspective, we feel comfortable where we are now, and it's progressing. So I think on the products side, you mentioned DeFi, you mentioned other stuff. It's interesting to see. I think one of the most interesting things that we've been recently viewing is the STOs market. So INX getting SEC approval to sell security tokens to the masses. This is amazing, right? This is like a real breakthrough, and we are on top of that, and them buying open finance for the regulatory perspective and assets. That's a real advancement. I think DeFi is definitely interesting. That's been a huge hype for a few months, and then, as you mentioned, kind of went down a little bit, and now it's where it is. We will keep seeing this. Crypto is experimental in many ways, and while you asking the STOs guys, they will say, this is going to be 95% of the market, and DeFi and all that will be part of that. It really depends on how you view that. I think we are kind of in the middle of that. I think DeFi and decentralized systems and all that have an amazing value to provide, but at the same time, there's a long way to go. So yeah, that's been very interesting ride.
Sure. So just elsewhere in the market, in terms of kind of other new products as well. We over the last couple of months we've seen kind of dominance of CME futures. So on the regulated side, sort of increase, and I think last week they actually surpassed OKX in terms of open interest. What are these kind of more retail focused unregulated exchanges now doing in terms of to kind of bring new products into the market, and what value are you seeing from these?
Yeah, I mean, derivatives is always, was interesting for us. I mean, if you want to see the market go mainstream, at some point, there's different reasons for that, but I think, one very strong use case is the hedging opportunity. So you cannot really expect a pension fund with like $10 billion under management to put $2 billion on Bitcoin and wake up tomorrow seeing it's 10% down. This is not how things work, even from a regulatory perspective. They need to be able to effectively hedge their position to a large extent. And for that to happen, you need to have a deep, healthy derivatives market, whether it's, futures or what we have perpetual here now, but also options, right? Which is super small right now. So I think while players like PayPal now open the gates to more retail, and we are seeing some new flows into the market on many exchanges, actually, not just the large ones. We think derivatives, and by the way, creating accessibility to products that are a little bit more complicated, like options. All right, so now you have this whole space of gamification of products, where you actually, you can buy and sell pretty much whatever bet you want. If Bitcoin hits $30,000 next 3 months or whatever, stuff like that. You might not know anything about options, but this whole offer is behind the scenes structured by an option. Right, that's somebody write for you, and you buy it, and they sell it, and you both share the risk. So we are seeing more and more interesting stuff like that coming up. And as a market maker, as a liquidity provider, and an algo trading, we are trading around $150 million on a daily basis across most of the products. Option is still small; it's still experimental from our perspective, but it is getting there. And we are design partners with several of these players that are working on the risk management side of things, on the offerings, on the products, and how things should work. Yeah, this is very interesting, and I think next year is going to be a significant year for that. Will be a significant ramp up.
Sure, and I see Binance have recently launched a couple of new perpetual swaps, XRP, I think, and Link as well. What's the depth like in these contracts? Is there enough for you to, is enough for everyone to kind of take advantage of, or?
Yeah, it's still limited. I mean, the previous, I'd say the old view on this stuff, maybe to some extent it still is, and it's right, is that, if you are an asset issuer, you might not want to be on derivatives or have derivatives for your asset, because now you can, people can short it. Mm-hmm. So there's a mix, but at the same time, it's actually opened the gates for much larger players and much larger volumes and trading opportunities. So this is always a game like that. We've been discussing with a lot of these players before, and kind of the debating or thinking about whether they should do it or not. I think it's really a matter of size and maturity of the industry. So you do need to have a derivative, an effective derivatives market for an asset generally, because then you have like a solid price discovery process, right? You cannot just have something that goes one way, right, and everybody's happy, and if it goes the other way, everybody's sad. That's not exactly how it works in sophisticated markets. So so in general, I would say you have to have that. Right now, it's still small. It's still early days. We are seeing that growing. Bitcoin is still very dominant. I would say probably 85 to 90% of the market on derivatives. Ether is probably somewhere around 5 to 10. It is growing for sure, but it's still small. I'd say we need to see more, more retail, more players, more funding, more flows into the market for that to to grow.
Sure, but the exchanges do have a responsibility not to launch some of these things too soon. Because the temptation would be just to launch a perp swap for everything and then just generate more revenue through people flipping them around, but it's not necessarily healthy for the market as a whole.
Exactly. Right. Exchanges are playing an enormous role in this, for sure. So they could have done this, and some did actually, but it was not very successful. So I think now it's a lower pace, more healthy kind of trend.
Roei, we could carry on, but we'll leave some stuff to discuss next time you come and join us. We hope to see you again very soon. Cheers.
All right. Cool. Thank you, Paul.
Bye.